Let me check and make sure I'm live on all the right places. Hey, everybody, welcome. Let me know if you can or can't see me. Let me just make sure it's all working. Alabama, welcome. All right. There we go. Okay. So, yeah, we had a bunch of people yesterday. I was surprised at how many questions there were. I don't know if it'll have the same turnout today, which is good news for any of you if you have any questions to answer. So I guess we'll just dive in. Today is my daughter's birthday, and it is tax day, and it is 1 week before my vacation. So it's an exciting day. So I have some questions. I'll dive into these, and then if there's time, there's still a bunch of leftovers from yesterday that I can start looking into. So let's see. Celeste asked, let's see, I can put it up on the screen on YouTube. Purchased health insurance on the marketplace. I checked insurance as self-employed. My adjusted income was lower than allowed. Insurance credits, so no credits showed. Hang on. I unchecked the self-employment insurance box, and TurboTax gave me a $10,000 credit. Can I get away with that? Yeah, that's hard to say. So there's the net premium tax credit, which is the additional subsidy, or that's the additional subsidy that you get based on your income if you had a marketplace plan, but that also affects the self-employed health insurance deduction. They affect each other. So they can kind of do some weird things. It's hard to say without seeing your exact situation. And if you are self-employed and have health insurance, I'm not sure. I don't know that it's a requirement that you take the self-employed health insurance deduction. So I'm not 100%, but I do think you might have some flexibility there. And then if you're on Instagram, you can just put your question in the question and answer section. You can put it in the comment too. I just might not see it as quickly. All right, got a question from Rhonda. Number one, can married filing separately take the home office deduction if the spouse pays all the bills and mortgage payment? That's a good question. I mean, if you're married, the IRS, I'm pretty sure if your spouse pays for something, it's just as if you paid for something. So I don't know. I'm not 100% on this one either, but I would say yes. You can take it. Can we write off giveaways as advertisement expense? So like on Whatnot? Yes. We pay the shipping, so would the deduction be the cost of goods sold plus shipping? Yeah, you could deduct it all. Whether you deduct it as cost of goods sold or advertising doesn't matter as much. I purchased jewelry making supplies to sell completed product. Do you suggest keeping a separate inventory for that? And how do you put the price on the final product? Jewelry making supplies to sell a product. Uh-huh. So, like, should you keep an inventory for your raw materials? Yeah, that's there are different ways you can do that. I mean, with that stuff, I would probably lean toward using the cash method for inventory where you just deduct it as you purchase it. Or you can set up a system where like a really intricate and detailed cost tracking system where you track the cost of every item and then you put those together and you have the cost of the completed products. It can get a little it's kind of situation specific. If I don't make enough if I don't make the eBay threshold sorry, if I don't make the eBay threshold, does the IRS get any information of my income? I don't think so. So if you're not above the $20,000 threshold, at least for 2022, for 2023, in theory, it's going to be $600. If you're not above that, then the platform typically will not generate a 1099. And if there's no 1099, there's nothing for them to send to the IRS, and they won't send you a copy either. So, no, the IRS would typically not have visibility to your sales if you are not above the threshold. You're still supposed to file, they just don't have any visibility to what you're supposed to file. My program is Reseller Tax Academy. Someone put up a comment. Your program has helped me so much. Thanks for helping us. It's $99 off today only. It's my special tax day sale. So that'll be done later tonight. So Blanca is asking, what annual income do you suggest to hire a CPA that can help you throughout the year or to do your taxes? Um, so it's not so much your income as it is the complexity of your tax return. So if you have a W-2 and that's it, your tax return isn't that complex. But if you have an investment property, if you have a side business, a reselling business, um, a rental, the more pieces or layers that you add to your tax return, the more complexity and the more opportunity for tax savings, and the more likely you could benefit from having either consultations with a professional or hiring a tax preparer. So, but there's not necessarily a an income threshold. So let's see. Huh. Um, so here's a question: what would be the reason married people would file separately? Um, that's a good question. I mean, there are a lot of reasons. I'm just trying to think of maybe some of the most common ones. I mean, a lot of times when they're in the middle of a divorce, they might want to file separately. Um, Sometimes, I don't know, maybe it just depends. It's almost if you're married, it's almost always more beneficial to file as married filing jointly, but there are a handful of situations where it can be more beneficial to file as married filing separately. I don't know what the percentage would be on that. Maybe, I don't know, 3 to 5% of the time, if that. And it you can run the tax return both ways to see which one is going to be more beneficial, married filing jointly or married filing separately. So someone's asking, are your services available today? I don't know if they mean like today on tax day, April 18th. I'm going to say no on that one, but if it were just like in general, then yeah, especially after tax day, I have more time for consultations and stuff. Do we expense supplies in the year we purchased or only when used? Um, Typically when purchased. Yeah, like any business supplies, just deduct those when you purchase them. Can you speak to deducting home office expenses as it negatively affects your tax deductions when you sell your home? Yeah, this is a good one. So there are, if you work, if you are, if you have a home office space that is for uh, a business that you own. So if you work from home but you're employed, you have a W-2 employer, you're not eligible for the home office deduction. If you're self-employed, you can, and you have a home office space that you use regularly and exclusively for your business, you likely qualify to deduct the your office space. And there's two ways you can do that. You can do that through the simplified method, which is simple. You just get $5 per square foot up to 1,500 square feet. Nope, $5 per square foot up to 500 square feet. So the max deduction is $1,500. That's the simplified version. Or you can use the regular or traditional home office deduction method. And that's where you multiply. So if your home office is 10% of your home, you can take 10% of a lot of the different home expenses like your mortgage interest, rent, property taxes, utilities, renters or homeowners insurance, and you can take depreciation on that business portion of your home. So if you're using that method and you're taking a little bit of depreciation every year, if you ever later down the road, if you sell the home for a profit, the IRS makes you add back or recapture the depreciation piece that you deducted in prior years. So they're basically just making you reverse the depreciation piece of the deduction. So sometimes that um, scares people away from taking the home office deduction, but I mean, it's it's still, I mean, you still have all the that you, in theory, when you depreciate, if you're depreciating something, the theory is that the value is going down. But when your value goes up and you sell your home at a profit, the IRS says, well, you shouldn't have been allowed that depreciation, so you got to add it back. So that's what that is. If you don't own the home, so if you're renting the home, either version is fine. You won't have that depreciation add back piece, so it might even be more advantageous to use the traditional method if you're renting, if it's more than the simplified method. The Seller Academy course was awesome, says Elizabeth. Thanks, Elizabeth. Gosh, so someone is asking, I'm Canadian. Do you have any good Canadian CPA recommendations? I unfortunately don't. It was like a year or two ago. I was talking to one Canadian CPA just through my DMs on Instagram, and I think they did reselling stuff, but I I lost it, and I've gone back and tried to look, and I can't find it. So if you do know a good Canadian CPA, let me know because I need a contact because I get that question of it sometimes. Ooh, here's a good question. How do you deduct unreimbursed expenses in an LLC partnership? So when you have a multi-member LLC or an S corp or a partnership, the way that you deduct your home office expense, your home office deduction, or your mileage, um, or things that you pay for personally, those have to be deducted by the business by reimbursing you for those expenses. And this question is saying, well, how do I deduct unreimbursed expenses? So in the case that the business does not reimburse you, um, you can deduct those on your K1. So the business should provide you with a K1, and then I forget, one of the boxes on there is where you add those unreimbursed partnership expenses. But it also has to be part of the LLC's policy that that's what you do. So here's a really relevant question that I've been seeing a lot this year. They say my adult son doesn't remember if, when visiting the local IRS office last year, if he was given a PIN or not for future taxes. How can he find out without visiting an office? So you have the option to get what's called an identity protection personal identification number, or an IP PIN. And a lot of times the IRS will issue that if you've had like somebody try and steal your identity, or you can go on and get one yourself. And it's just a number, a 6-digit number that you can get and include with your return, where if your return is not filed with that number, it's not going to be accepted. So nobody can file using your social security number. And last year I think I had maybe 5 people who had IP pins. I think this year I've had like 5 times that. But I don't know if you can go on and and I think they issue a new one every year. I don't know if you can see what it was on the website, but you just Google how to get a new IRS IP pin, and it'll take you to their page where you can go check all that stuff and get a new one if you need to. All right. So I have a large collection of vintage clothing that was mostly purchased 20 years ago. I'm trying to think. I answered a really similar question yesterday. I want to start selling them. I don't have any receipts for those items. Am I out of luck with deductions? So I don't think you're out of luck. Some people worry that if you don't have a receipt that you can't deduct it. I don't believe that, because those are still expenses that you incurred. You individually have a cost basis in all of those items. And when you start selling them, you're basically contributing those items to your business. And when you contribute those, your business inherits or takes on that cost basis, like what's going to be its cost of goods sold. Even though you don't have receipts, that doesn't change the fact that you incurred expenses on those items. So then, I mean, the best you can do probably is just estimate the original cost. Like, the IRS isn't crazy about that, but I would rather do that than do nothing. Like, in theory, they could disallow those deductions if you don't produce receipts or support if you get audited, but very unlikely that that ever happens. Do you have to file on time if you resell and made over $400 in profit, but still expect a refund? So do you have to file like by the deadline, by today, if you made over $400 but still expect a refund? If you're getting a refund, then you're not really subject to the deadline, because any late filing penalties or late payment penalties are based on the amount of tax owed. And if you're getting a refund, there's nothing to penalize you on. Hey, Rosalind, she said, I store my inventory in the garage, and my office is inside the home. Do I count the garage as office space? Yes, I would. Yep, include the garage square footage as part of your office square footage, and also include the garage square footage as part of the overall home square footage for that calculation. Can you Deborah is asking, can you deduct garages that are not attached to your home plus the home office? Yes. Yep, that can count toward your home office deductions base square footage. Is it better to buy a car for business use only or just use the car you already own? Which gives the best tax deductions? It probably depends, but I would lean toward just using the car you already own. You might get more tax deductions if you go out and buy a new car, but at the end of the day, you'll end up with less cash in your pocket, even though you're realizing more tax deductions. Hmm. Okay, let's see here. If I if I don't make the eBay threshold and I only have a 1040 from my other job, do I get penalties for not filing by today or getting an extension? It depends. Like if when you do your taxes, if you end up owing, then yeah, you'll be subject to late penalties. If you end up getting a refund, then you will not be subject to late penalties. So someone said, "Are you up on Facebook Marketplace 1099Ks?" Sort of. I put together a document that shows to the best of what I could find out if some of the different 1099Ks included sales tax or not, but I don't know any of the Facebook Marketplace specifics off the top of my head. Dean is asking if I used a credit card to purchase inventory and transferred that to another card at 3% for a year to extend my inventory cost, can I deduct the 3% charge that I paid on the credit card? Hmm. If the 3% is being accrued on business purchases, then yes. Like if it's a bunch of personal stuff on there and you're paying 3% on that, then no. I think it just depends on the personal versus business breakdown. Yeah, so back to the 1099K question. So whether it's Facebook Marketplace or Poshmark or any other platform, they all do it a little bit differently. Most of them, many of them include sales tax. So the sales tax the platform collects, the number on the 1099K includes that number, and it shouldn't be taxed for income tax purposes. And it also includes other stuff like if you have sales for items that were later returned, those sales are still there. So it's typically an inflated number. So you want to make sure that you don't report less than that, but that you deduct the difference so that you're only taxed on your actual sales. Can you deduct mileage if you use someone else's car for business trips? I don't think so. I think for that one, I would probably just log that stuff under travel. Like if you end up paying for the gas or if you pay that person for the use of their car, I would just deduct that as a general travel expense. I am the new owner of an LLC that has an employee. Would I do my taxes as a sole proprietor or as an LLC next year? If you're a single member LLC, it's going to be the same either way. So yeah, if you're an LLC, you would put the name of the LLC, you would put the EIN number, but it would all go on a Schedule C of your individual tax return either way. Chris is asking if I see eBay sellers, a good amount of eBay sellers that utilize the custom SKU field to track cost of goods sold. Oh man, yeah, I don't know about that one specifically. I don't I don't. I was gonna say I don't see that, or maybe I just don't pay attention to it because I'm always looking at other things. But he says, what are the top three methods? He said, what are the top three methods you'd recommend to track cost of goods sold? So if you are using the accrual method for inventory where you're tracking your cost of goods sold so that you can deduct your inventory only when it sells, if you're starting out small, I would just use the individual item tracking method where you just record every purchase, you record when it sells, but after a while that can become pretty tedious, at which point I'd probably use an average tracking method. And I have spreadsheets for both of those. And each has a video linked. I need to update those videos. I'll do that on YouTube this summer. I live in a state where threshold I heard is 1,000 for 2022. So do I need to file if I get a 1099? You typically need to file whether or not you get a 1099. But yeah, some states have thresholds that have been lower than the federal threshold. So if you don't file your activity, the state in that case will likely send you a letter and say, "Hey, it looks like you underreported your earnings and you owe more tax." Yeah, so back to the 1099s, refunds are not deducted from the 1099s. So she's saying, what can you do to balance it? So say your actual sales were 8,000, but you get a 1099 that says 10,000. So just assume we know both those numbers are, we know your number is correct. The 10,000 is inflated because it includes sales tax and it includes sales for items that were refunded and those amounts weren't taken back out of the 1099. So what I would do in order to, it's kind of a dumb uh, system like Nick's right now. But to get around it, I would just report the $10,000 as income on your tax return. Because if you don't, the IRS is going to send you a letter and say, hey, you're underreporting your income, even though it's not actually income. That's why it's dumb. But report the 10,000 and then deduct 2,000, an extra 2,000 as, I mean, you could put it under taxes, you could put it under returns, so that your net sales after you take out that 2,000 is the 8,000, which matches your actual sales. So then the IRS is happy because they're seeing the number they expect, even though it's wrong. And you're happy because you're not being taxed on more than you should be. Or maybe you're not happy. Maybe you're just less unhappy. So, follow up question: how exactly can I get an accurate value for my real sales versus what the 1099K is showing? I mean, that's where bookkeeping comes in. That's why the bookkeeping piece is so important. If you haven't done that, then I would look at running some of the different annual summary reports. Like Amazon has a good one-page summary report. There's one that I typically look at for eBay as well. And you'll see when you get your 1099 that it's different than the sales reported in those reports. Or you can at least tell what the sales tax piece is. Let's see here. Let's see, we just started paying sales tax this state. Are these sales tax deductible? Yes. So if you're selling on Amazon, eBay, Poshmark, any of those platforms, you shouldn't have to collect sales tax because the platform does it for you. If you have your own store through Shopify or something like that, then you should collect sales tax on sales to customers who are in your own state typically. So say you're collecting sales tax, this person is asking, so you're collecting the sales tax and then you remit those sales taxes to the state. And they're saying, is this deductible when I send the tax to the state? Is it deductible? It's not deductible because it's technically not taxable in the first place. You're just a pass through. You're collecting income for someone else. So it's not your income, so it's not taxable. So when you pass it along to them, it's not deductible. But if for some reason it is included on your tax return, you would want to deduct it back out. Or say you never collected it in the first place, you still owe it. So maybe you're paying it out of your own pocket. In that case, it's still not deductible. Yeah, so I just mentioned this. Shopify is not a marketplace facilitator, meaning they're not required to collect sales tax for you. You have to do that yourself. Here's a good question. How does the typical IRS audit play out? So the typical audit is done by mail. They'll send you a letter and they'll say, and this isn't a letter saying you owe more tax. A lot of people get a letter saying, hey, we got this 1099 that says you owe more, so you owe more tax. And they'll say, oh my gosh, I'm getting audited. That's not getting audited. That's just getting a letter from the IRS showing that you owe more tax. And you can respond to it or reply or send an amended tax return and include all the deductions that you should have included and your sales and make it all go away. But an audit is a letter that you get in the mail and it says, you've been selected for an audit. We would like to see some additional documentation for these 2 or 3 areas. So they very rarely look at your entire tax return. They're just going to say, can you send us some documentation or the detail for your cost of goods sold or your mileage or your supplies? And it could be totally random, or it could be that what you're reporting is out of the normal ranges that they see. But yeah, it's less than 1% chance that you get audited, maybe less depending on your circumstances. But they do have what they call field audits, where either you meet the IRS agent at an IRS office, or they might still, in very rare cases, come to your home. But if your chances of being audited are less than 1%, your chances of having some kind of field audit have got to be 100 times less than that. I don't know the statistics, but it's very small. So what meals are deductible for 1099 gig workers, or which is the same as a contract worker or someone who's self-employed? This is a good question because first of all, you have to qualify for the meal has to qualify to be deductible. And if the meal qualifies, you can only deduct 50%. So first of all, for the meal to qualify, it has to be either a meal that's part of business travel, which typically includes overnight being out of town and having an overnight stay. Any meals you have there would be deductible, and any meals for business meetings. And it can't be a business meeting with just you by yourself. It has to be with another person, and there has to be a business purpose to the meeting. So that's not great news for a lot of us, because if you're just out thrifting by yourself and you stop for lunch in town, that meal is not likely deductible. For 2021 and 2022, qualifying meals were 100% deductible. That was a special provision in one of the laws that they passed to try and give people a little bit of relief. For 2023, they go back down to 50%. So here's an answer to Chris's question about the custom SKU to track COGS, cost of goods sold. He says when you export the eBay report or spreadsheet at the end of the year, it includes that column. Then you just total it up, if that helps. Here's a good question that I want to post some content on. Are cashback such as I don't even know how to say the word. I see it all the time because my clients use it. Rakuten? Rakuten? Don't know. You can tell me. So is cashback part of income that needs to be reported, or cashback from credit card rewards? So this one depends. So the IRS will say that cashback and credit card rewards are not taxable because they just treat those like a discount on the original purchase. So if you pay $10 for something, you get $2 of cash back. The IRS says, oh, that's not taxable because we'll just treat it as if it only cost you $8. The problem is most resellers will have already deducted $10. So the fact that you're deducting the $2 then makes it taxable when you do get the cash back. But if you only deduct $8 originally and then you get the cash back, then that's not taxable. So I'm not sure if I said that the greatest way, but I plan to do a video on that. Just a quick, simple video on that pretty soon. For cash purchases of large amounts of inventory, is a cash withdrawal receipt and a handwritten bill of sale enough of a record? Is this an issue after 10,000 in purchases? So yeah, large purchases of inventory, is a cash withdrawal receipt enough of a record? So for every purchase, the IRS wants you to have some type of record, some type of documentation that substantiates that transaction. And there's a whole spectrum. You can have documentation that's weak, and you can have documentation that's strong. And some documentation is better than no documentation. Like a bank statement is a form of documentation, and that's better than nothing. But if I have a $10,000 charge on there, that's documentation. But that doesn't tell me as much as individual receipts that make up that amount would tell me, which would be a stronger form of substantiation. So again, it's just what's the risk if you get audited? Are they going to be satisfied with that level of documentation? Like I probably wouldn't worry about it too much. Even I don't have the greatest documentation. If I make a purchase, just because the risk is so low, sometimes it's just not worth your time. You could spend all day like organizing your receipts and stuff, but it's just not worth your time. You don't want to forego it completely. You just have to find that balance. What should I do if I forgot to track miles? I would just do your best to recreate them. And then that recreation will be your documentation. So, I mean, I think you can estimate it, within 90%, because if you have a routine, if you go to the post office once a month, if you go to the flea market twice a week, you can figure out what the round trip mileage is on that, and you can multiply that by 50 weeks or whatever, and then use that, and then just do better tracking going forward. So if you go to a garage sale or flea markets and the seller only gives you a handwritten piece of paper, is that sufficient? Yeah, that's sufficient. And that's more than most people get. Most people, they might give you nothing, in which case you just need to keep your own record, and that will suffice. Yeah, and for the mileage, check out Mile IQ. It's a good app to track your mileage. Can you use, for tracking your inventory costs, can you use a mix of average cost method and specific identification? Yeah, I don't see anything wrong with that. Like if you is the key is being consistent and making sure you don't double deduct anything or miss any deductions. But maybe you you could institute some kind of internal policy where you say anything less than $1,000, um, we'll use the average cost method. Say I just buy lots of little pieces and I'm just going to average all that. But if it's above $1,000, I'm going to track those um, specifically. Yep, I think that's fine. Just making sure I'm not missing anybody. Um, okay, again, my Reseller Tax Academy course is on sale, $99 off today. I don't plan to drop the price that much for the rest of the year. So if you want to ditch the stress for 2023, now is a great time. And I got a question from Angie. It looks like, how is your tax academy set up? How long is the course? So there's 9 different modules. It's very systematic and builds on, each one builds on upon the prior. It's go at your own pace. It's video. You can log in, take it whenever you want. I mean, if you do 15 minutes a day, it'll take you a few weeks. It's about a little over 4 hours of content. Um, and yeah, talk about all the different types of tax, the important things you need to know, the different types of business entities, audits, deductions, tracking your inventory, a little bit of bookkeeping. I think it's a really good introduction for a beginner as well as intermediate resellers. And that is a 24-hour sale. All right. Question from Rosalind. Can we deduct gas fuel for the car we drive, even if we drive it for personal use, but also use it for business use? Yes. So with your car, you can deduct either the business mileage, like the actual miles that you drive for business, or you can deduct the actual expenses, which include the gas, the repairs, the maintenance, insurance, but only the business portion of those things. So you should still be tracking the mileage because that's how they determine the business use. If you drive 1,000 miles and 700 of those were for business, 70% is the percentage that you use to determine how much gas you can deduct if you're using the actual expenses method. Yeah, here's another good point. Another good form of substantiation is a picture. It's one a lot of people might not think of. If you're coming home with a haul of $10,000, if you just take a picture of all that stuff, then in that picture you have a description of the items, you have proof or evidence of the location. You probably have like a date stamp on there. So I don't see anything wrong with that. Somebody said, what percentage of my receipts can fly out my window before I got to worry about it? I can just picture that. You're driving home from like a garage sale or a flea market and your window's halfway open. You just got receipts flying down behind you down the road. If they're like, I don't know. Again, I don't think it's a big deal, especially if they're low dollar receipts. Yes, they say you should have substantiation for every transaction, but on the other hand, does it really matter if you're never going to have to reproduce them? I don't know. Um, wow, got 45 minutes already. Okay, so how is the QBI calculated? So QBI stands for Qualified Business Income Deduction. Yeah, if you're using Free Tax USA or TurboTax, they're going to calculate it for you. But it's going to be about 20% of your business profit. It's a deduction you can take on your main tax form that's worth 20% of your business profit. So if your profit is $10,000, you can reduce your taxable income, not your business profit, just your overall personal taxable income by $2,000. So that is something to check when you do your taxes to make sure it's on there. What qualifies for amending taxes for the previous year? I owed $7,000 last year. Pretty sure it was wrong. Yeah, I mean, if you believe there was an error in your prior year tax return, then it's worth at least looking at it. You can prepare or have somebody prepare the amended return just to verify. But yeah, I mean, anything qualifies. Well, not anything, but if there was a mistake in your numbers, then yeah, that definitely qualifies to go prepare an amended return. What? What? Okay, here's a good one. I gotta screenshot this. Robin says that H&R Block did my taxes this year. They said mileage can never be taken if you thrift and begin your trip from home. Wrong. Wrong, 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 wrong. Because your home, so let's say I'm a contractor, but my main office is um, a mile away from my home and I drive there every day. So the commute from where I live to my office is not deductible. So your commute is not deductible. But if I'm at my office and I drive to go see a client, that mileage is deductible. So if your home office, if your office is your home, then anywhere you drive for business purposes is not a commute. So if your principal place of business is home and you're driving to a flea market, that mileage is definitely deductible. So speaking of amendments, if you already filed and didn't take mileage, if you had, I don't know, 3,000 miles, that's a $1,500 deduction. And maybe, I don't know, $500 back on your tax return. Here's one of my favorite questions. At what point is it worth it to become an S corp? And I mentioned a threshold yesterday, but I didn't talk about why. So you likely start off as a sole proprietor. Maybe you form an LLC. Once you have the LLC, you have the option to elect S corp status or become an S corp. You're still an LLC for state purposes, but for federal income tax purposes, you file a different form, and your earnings are not subject to self-employment tax. So sole proprietors, LLCs, they all pay self-employment tax, which is 15% of your business profit. So as an S corp, you don't have to pay that. You do have to pay yourself a salary, which has payroll tax, but all the earnings left over after that are not subject to self-employment tax. So then at what point does it make sense to become an S corp? Typically, you want to start considering it when you hit the $30,000 or $40,000 of annual profit. And that's because that's the point at which the S corp savings exceed the additional costs that you'll incur from operating as an S corp. So as an S corp, you'll have a separate tax return. That could be $600 to $800. You have to have payroll, so you'll likely have a payroll service that could be another $600 or $700. So you just want to make sure your savings are above $1,500, $2,000, and you exceed that when you're at the $30,000 or $40,000 level. eBay final value fees are deductible, but you got to make sure that you're including the gross eBay income, deduct it from that rather than just your payout. If you purchase a discounted bundle on Poshmark and resell one item, how do you calculate the cost of goods? So you'll just have to break that out yourself. Yeah, so if I buy 5 items for $25, um, I could just do an average and assign each of those items a cost of $5. Or if you get rid of 4 of them, you could assign the one item that you keep a cost of $25. There are different ways to do it. You just gotta kind of do what makes sense. It depends. So I have somebody plug in my spreadsheets, and I do hope to improve them. So right now they're specifically to help you track your inventory. Um, but I do want to make them more. I do either improve those or make a new spreadsheet that's really for helping you track your overall business if you're not using the software program. Summer project. Does the IRS have specific agents that only review certain types of businesses? For example, Agent A finds certain deductions suspicious. However, Agent B says such deductions are normal. Um, yeah, I think you probably see a whole. I think it's hit or miss. You could like if the IRS, if you get a penalty and you call the IRS and they don't waive it for you or forgive it for you, I say you should call back. Just call back one, two, or three times until you get someone on the phone who is more helpful and who does potentially forgive your fee. Um, and that's not unique to the IRS. Same thing happened with my wife last week calling American Airlines. The first person was not helpful at all. Seemed like the change fee was higher. Called back somebody else, and it was like no problem. They didn't give us any pushback at all. So that phenomenon, that type of human behavior can be exploited as far as the IRS goes as well. If my file is rejected, can I get a penalty? My PIN code was wrong. So I see these all the time. I either don't have the person's PIN, IP PIN, so then the return gets rejected. There's no penalty for that unless it's like today and you have a bunch of people scrambling and emailing emailing me and telling me to file their tax returns. Yeah, they still made the deadline, but it'd be better if we did it a few days ago in the case that their return gets rejected. I guarantee I'll file a couple returns today thinking that we just made the deadline, but then tomorrow I'll get a rejection notification because we didn't have their correct PIN. Or maybe they're claiming a dependent who already filed their own taxes, or there's a bunch of reasons. Yeah, here's a good comment for recreating your mileage. Google Maps keeps a log of all the places that you've driven to. Those are always fun to look at. Mine is pretty much just a triangle. It's my house to the gym to Cafe Rio, which is a burrito place, back to my house. A very exciting life. If we keep record of our cost of goods sold, can we still deduct the inventory we purchased that year? Um, Good question. If you're using the accrual method for inventory, then you wouldn't deduct your purchases, but I think you're just asking, even if we keep track, can we still deduct the inventory we purchase? So the question is, can we still use the cash method for inventory if we're keeping track of our inventory? And I think the reason you're asking that question is maybe because you've seen my inventory video. I was going to tell you to go watch my inventory video, but I think you're asking the question because you did. So that's the gray area. If you're keeping an inventory, which is official IRS guidance or language, keeping an inventory, then you might not qualify for the cash method. So then the question is, what does keeping an inventory mean? I guess it depends how you're keeping track of your. If you're keeping track of your cost of goods sold, that's not necessarily your inventory. Maybe. Yeah, I don't know. It's kind of gray. I would have to go back and watch my own video again, review my notes on that. Someone said my course is worth it for sure. 99 off. So I'm going to walk through this in 15 seconds. It's $99 off. So that brings the total cost down to $300. The $300 is fully deductible. That means you're reducing your income you would otherwise be taxed on by $300. So if you pay an average 25% between self-employment tax and income tax, probably closer to 30%. It's sort of like an additional $90 off. So it's almost like your effective cost is closer to $200. So I actually think about that now so I'm in the 35% tax bracket. So every $1,000 that I make, every additional $1,000 that I make, I have to pay $350 of that to the government, which is a little bit painful. And it can also be painful to incur big expenses. So if I'm thinking about like an employee bonus or something, and this is totally hypothetical. Say I want to pay somebody $10,000 because they've done such a great job. But then I'm like, oh man, $10,000, that's a lot of money. But really, it's more like $7,000. I'm only paying them $7,000 because if I were taxed on that $10,000, if I kept it, I'd have to pay $3,000 of it anyway. Is a handwritten receipt good enough? Yeah. Oh yeah, I think we got that one. I forgot by $100 how much estimated taxes I sent in. So I think she's saying I got so when you make estimated tax payment, you have to report that on your taxes because then you'll owe less. You have to take that into account. And she's saying I got my estimates wrong by $100. Like what I reported was $100 off from what I really paid. And when that happens, the IRS will typically catch it and they'll send you a letter and they'll say, oh, hey, you overpaid by $100. Here's a refund. Or actually, that $100 payment that you said you made. So now you owe a little bit. So yeah, that's not a big deal. I've done that before. I made, as an example, either in a video that I made or a live like this, I paid $1,000 and I forgot to report it on my tax return. I think this is in 2020. So the IRS sent me back a letter. I actually got a refund for that. So I was like, whoops. Standard deduction, does that include things like the home office or mileage? No. So you have your Schedule C with your income, your business income and your business expenses, your home office deduction, and your profit. And then you have your regular main tax form page 1040. And your profit comes over to this page, and the standard deduction is separate from the business. It just goes on that general page to reduce your overall income. So what line do you enter gas mileage on the tax form? So it would go on your Schedule C. If you're using the actual expenses method rather than the mileage, that would go on line 9 of the Schedule C. But typically there's a worksheet that you have to fill out where you enter the different, like the gas, the maintenance, the insurance, the business portion of mileage, and then that worksheet amount would flow through to line 9 of the Schedule C. But hopefully you're using a program like TurboTax or whatever that is kind of walking you through that and doing the calculations for you. So no, Bobby, you won't be on the radar for misstating your estimated taxes by $100. Yeah, because I misstated by 1,000 a couple years ago, and I mean it happens all the time. So that's a good point. The IRS realizes that mistakes happen. Like they don't care. They're not going to penalize you, um, unless of course they were massive mistakes, like you owed a ton of tax that you haven't paid for a few years. Then they're going to say, "Well, you owed this 3 years ago, and now you owe us a bunch of interest and penalties." But the little stuff is typically not a big deal. So she says, "I feel like my tax person thinks that I, as a full-time reseller, am a burden. Should I find someone else?" Um, Maybe. I mean, if you're just being self-conscious, that's one thing. But if you really feel like you're a burden to them, or if you feel like they're annoyed, or if they aren't friendly with you, if you don't feel like you're a good fit, then yeah, might be it wouldn't hurt to get somebody else. I'm trying to think because that definitely could be the case. Like 80 or 90% of my clients are resellers, and a lot of them have spouses that are, you know, have other professions or have rentals. So I see a lot of everything. And then I also have the remaining 10%, which might be in totally different industries. Um, and if you have clients who are doing something that's totally different from what you're used to doing all the time, it can be additional work because you might have to go research something, or just do things that you're not really used to doing. So there is, I mean, there you could get annoyed, I suppose. But if it's not a good fit, it's also the responsibility of the CPA to say, hey, look, I don't know if I'm going to be able to offer you the level of service that maybe you should be getting, and then you can both have that conversation. But okay. Here's a good question. How does a capital contribution impact your taxes in a 50-50 LLC partnership if one has more capital invested than the other partner? So this is one reason that why LLCs are cool, like they're flexible. Your profit and loss allocations don't have to be the same as um, it doesn't have to necessarily match. How do you say it? It doesn't have to be consistent with the contributions that you make. So if I have a partner and let's say he contributes $1,000 to the partnership and I contribute $10,000, we can still be 50-50 partners. We don't have to be like 90-10 or whatever that is would be. It just means that I have more equity in the business, and I can take that out. So I own $10,000 of the business, and then we would each share in 50% of the additional earnings. So of the additional earnings, we could each take out our 50%, but then at the end of the day, I could still take out my 10,000. I think I simplified it, but that's the idea. Um, so I thrift only when I go to town and do other errands. I haven't been deducting mileage because it's not the reason I went to town. Is this correct? Yeah. So if let's say I'm at home and I go to work every day for my W-2 job, but sometimes on my way I go thrifting. So what mileage is deductible is the question. So what I believe is deductible is the deviation. So if it's 2 miles to work, I can't deduct those 2 miles. But if I end up going 3 miles because I went sourcing, then you can deduct the additional 1 mile. If you don't incur any additional mileage because your thrifting stop is literally right on the way, then there's no additional mileage you can claim there. If I were to overpay taxes but make errors, would the IRS reach out telling me I was wrong? Um, well, it sounds like there's two things there. If you overpaid your taxes, the IRS would send you a refund. If you overpaid your taxes and made errors, if the IRS had visibility to those errors, they would correct them on their end and send you a letter and say, here's what you reported, here's what we reported, and here's the additional tax you owe. Sometimes they're right, sometimes they're not. So you just want to make sure you understand. Okay. Um, if you pay your 100% previous year safe harbor payment, but you end up owing more when you file, can you still get an underpayment penalty? Yes. So, in order to avoid penalties, you will often want to make estimated payments throughout the year. And if you pay at least 100% of your prior year tax, um, then you're not required to make estimated payments in the year. You still might owe additional tax at the end of the year. You just won't be penalized for not having made additional estimated payments because you already met that safe harbor, which is you already paid or had withheld 100% of your previous year's tax liability. But let's say you still owe tax at the end of the year. If you extend your tax return but don't pay the tax due, you will get a late payment penalty. Can you add 1099K section to your program? So I do talk about the 1099K in there. I don't know that the lesson is specifically called 1099K, but I do talk about it, and I talk about how to adjust for it. Um, I'm going to write that down right now. So I'll go check that and see if that does kind of warrant its own lesson. And if you are in the course, again, it's lifetime access for the life of the course, and any enhancements or yeah, things that I add to the course, you just get automatically. I mean, it's $300. I just bought a like kind of a tax my own tax training program for $4,000. So, in other words, it's a good deal. Is value of inventory what everything is listed for or what I purchased for? So the value of your inventory in accounting terms, you know, you could say the value is the market value, but what we're typically talking about when we're talking about cost of goods sold, the value of your inventory, or when TurboTax asks you what's your beginning balance or beginning value and ending value, it's your cost. It's what you purchased it for. So this is a good question. If I file a federal extension, do I also need to file a state extension? Most states, I don't know, I'd say 70% at least of states don't require a state extension. They accept the federal extension as the state extension. Um, I'm trying to think of an example. Yeah, I don't know. If you and you can look that up too. Does California accept the federal extension? So if I file the federal tax extension today, then California will accept that, and you don't have to file a separate state extension. But if you owe tax, they do want you to pay the tax. All right, we're not going to go. For those of you who feel like you have to stay till the end, we're not going to go more than 20 more minutes. So We got that light at the end of the tunnel. Um, how to write off cell phone purchase. So I typically just stick that in utilities on the Schedule C. If you use it 50% per business, then you can deduct 50% of the cost. Oof. So 795. So someone's saying they paid Jackson Hewitt $795 to file their taxes this year. And I'm just going to assume if you're like the average return that I do, it's maybe a W-2, maybe some 1099s, a 1098, a Schedule C for the business income. Or I'd be curious to know if that was a separate business tax return. Making me think I should raise my prices. Can estimated quarterly taxes be paid on dates other than the actual deadline? Yes. You can pay it before the deadline. If you're past the deadline, it's still it'll still benefit you to pay it. If you're 3 days late, that's only 3 days of potential interest, which is going to be really minimal. So yeah. Does inventory go under expenses? So your inventory will go in the cost of goods sold section. So this question is pretty specific. It has to do with non-incidental materials and supplies. So I would just watch my video or read my inventory article for this one, because typically that categorization is not relevant for resellers. So if you are using the cash method, then you would just deduct all your purchases as cost of goods sold. I'm still doing taxes. Lots of taxes. We have a 16-year-old who helps us in the business, but we pay her. But at what point do we hire her as an employee? I would just consider her already hired as an employee, because when you hire your kids as employees, their earnings are not subject to payroll tax. So you don't have to withhold or pay them or pay the IRS, Social Security and Medicare. Which, if they're just a contractor, then they have self-employment tax, which is essentially the same as payroll tax. So you want to hire them as an employee. And they don't really need a W-2, because the purpose of the W-2 is to show your tax withholdings, your payroll tax withholdings. Just call them an employee. They don't have any payroll tax. And if they make less than $12,000 or $13,000, all their income is wiped out by the standard deduction anyway, so they don't owe any tax. So that's a good tax strategy. How does payroll work for S Corp for reasonable salary when business income changes throughout the year? When you're an S Corp, the requirement is you have to pay yourself a reasonable salary. So I would just look at what is a reasonable salary. Like, what would you pay someone else to do your job? Or what's the least you would pay someone else to do your job? If your business is losing money, then you're not required to pay yourself salary. I mean, you want to make sure you have some earnings left over. So this one just depends. When I travel somewhere with a beach, sometimes I want to stay in a condo on the beach, even if my primary reason for travel is to source. When traveling for business, are there any restrictions on cost of hotel? Not specific restrictions, but there is a phrase, I forget the phrase, like, is it ordinary and reasonable, in the course of your business, or is it lavish and excessive? Like the IRS, if you rent some mansion on a beach, the IRS could come and say, no, you don't get a $10,000 deduction for this weekend rental. When you could have rented something a little more reasonable that would have been $1,000 or whatever. But I mean, a house on the beach, I don't think that's unreasonable, depending on how lavish or how much more it is than what you could rent elsewhere. I mean, you can get really aggressive. Again, some all the TikTok advice you hear. I just posted one about somebody saying you could write off your birthdays. They're like, well, it's not a birthday, it's a mastermind group. You invite over all your friends, you talk about your plans. And I'm like, yeah, in theory that could work, but then it's not really a birthday party, is it? And then you have the party after and you can deduct the drinks and you can deduct everything. So that is what you would call an aggressive tax position. But I'm not saying no. I think that's actually good. It doesn't sound too aggressive to me. Anastasia is asking, I had zero inventory at the beginning and end of 2021, started selling on eBay in 2021, doing taxes on TurboTax this year. It's asking about inventory for the beginning of 2022. So whatever number you showed for ending inventory in 2021 is what you should put for your beginning inventory of 2022. And if you have to make any adjustments for that, you would do it in the purchases line. We might almost be caught up. That's interesting. Carol says my brother paid $1,200 to his CPA. Which may or may not be reasonable depending on what his situation was. Most of the individual returns I do are between 350 and 700. Typical reseller tax return is 450, 500. Might go up 5 to 10% per year. If they have an S corp or a partnership that requires a separate business tax return, that's going to be $600 or $700 or $800. So if they have a partnership return and a personal return, that could easily be 1,200. But yeah, there are some CPAs. I mean, I'm part of Facebook groups and stuff. There are some who charge crazy amounts. Some people get on there and say, I don't charge any less than $1,200 for a simple, W-2 tax return, which is a lot. All right. Getting close. So someone asked if spreadsheets are provided as part of Reseller Tax Academy. So those are. I give you direct link in those, and I also have a few spreadsheets. I think. I mean, the spreadsheets are available just on my website too. If you just go to notyourdadscpa.com, scroll down, click on spreadsheets, and you can see my inventory tracking spreadsheets. Whoops. Quick question for you. Has anyone seen the Mario movie and was it good? Because I have to go sit through that today. um, yeah, I had said light at the end of the tunnel. This guy says with taxes, it's more like a pile of dog crap at the end of the tunnel. Um, Josh at Harry Tornado said, should I just keep buying more and more houses until the depreciation adds up to our income and basically wipes it all out? There are some interesting real estate strategies, and I'm actually going to be I'm going to a real estate tax Summit because I do want to learn more. I have a lot of clients who have like basic rentals, and that's not difficult for me to do. But when you get into like someone who buys a lot of rentals and what are the opportunities, what are the tax opportunities and tax savings opportunities you have? I'm not as much of an expert in that stuff, but working on it. I write off. Okay, I'm putting that up there. Screenshot for the IRS. Is inventory part of wages and income or deductions and credits? Inventory is part of deductions. Nope. Let me look at a Schedule C. It's up on the top. It's figured on the second page of the Schedule C, but then the actual cost of goods sold amount flows through to the top, which I believe is part one. Yep, on line 4 of part one. But you figure it out in part 3 of the Schedule C. Okay, so here's a fun one. Tammy's asking, can you explain a little bit about how to handle consignment? Specifically, I'm selling items on eBay for a friend. She takes 20% of the profit and I keep 80%. Seems like a pretty good deal. So it's almost like you charge her an 80% commission. So there's like the technically correct way to account for it, and then there's the simple way to account for it just based on the fact that all those sales are linked to your social security number. So I would just include all of it in income, and then whatever you pay out to her or to your friend, you just put that as either a commission or cost of goods sold. And I have a lesson that deals specifically with that as well. So a partnership tax return is separate, and then the typically partnerships don't pay any tax, but the income flows through. So if it's 50% of the profit will flow through to your personal return to be taxed there. And my like those separate business tax returns that I do, those are anywhere from $600 to $800. All right, scrolling through, making sure we don't miss anything we haven't answered. So we kind of talked about this. If I'm on my way to my W-2 job and I'm stopping along the way to ship a package, can I deduct the extra mileage? So only the mileage that you deviated. So if your normal commute is 1 mile, but you end up going 2 miles to go to the post office, then you can deduct that extra mile. But if you're really not having to deviate, then there's no additional mileage deduction. Okay. Fine, I'll throw it up there. Um, can you pay your pet a modeling fee if they're part of a TV show? There's probably an argument to be made. Question is, do you send them a 1099 if you pay them over $600? It's definitely getting into gray territory. Um, all right. What does one do if we haven't done taxes in the last 3 years and we don't remember where all my paperwork, we don't remember where all my paper would be to file it all? Okay, so you haven't filed tax in 3 years. You're not sure where your records are. If you had W-2, like if you were a W-2 employee any of those past 3 years, or if you had a mortgage, your employer, you could you your the IRS should already have records of that stuff because your employer would have sent a W-2 to the IRS. Your mortgage company would have sent a 1098 to the IRS. So I would, you could go back to your employer and all those banks and whoever and request those tax documents and see if they have them. Or at a minimum, you could go onto your IRS account and pull your transcripts, your IRS transcripts for the past 3 years. So you'll see everything they have a record of. And at a minimum, you could file your taxes based on that information and hopefully get a refund. If you're getting a refund, they're not going to send you a letter. If you owe tax, they would have already sent you a letter, most likely. If it's for 2019, today is the last day you can get a refund. You can. Here's another lame thing: you can only claim your refund 3 years out, and today is the end of the third year for people who want a 2019 refund. Do you do lives every day? No, I think today is the first day that I've done two in a row. I did one yesterday, and I feel like I only got through 30 or 40% of the questions. So I decided to do one today. And by this point in tax season, I'm just looking for things to distract me from all the last minute stuff that I'm supposed to do. All right, couple more questions, and then we're gonna call it good. And I hope you make the right choice and enroll in my Reseller Tax Academy. $99 off today. Deepest discount for the rest of the year. Deduct the rest. I have a customer who runs a tab with my business. My phone's freaking out. He constantly sells me items. He constantly has me sell items for him and then uses that money to buy items from me. What's the best way to put this down in my books? Oh, that's funny. Okay. I mean, so it's basically like a consignment. You will record everything you sell for him as a sale. Whatever you pay out to him is a commission. And then when he buys from you, that's income to you and cost of goods sold for those items. Catherine says, for 2022, my CPA did not fill in the cost of goods sold section. He put my inventory costs as other expenses. That's interesting. Next year, should I write my starting inventory as 0 to avoid issues? So my guess is he's deducting all of your inventory purchases, like using the cash method for inventory. Maybe rather than putting 0 in beginning and ending 0 in beginning and ending inventory, he's just avoiding that section altogether. I don't know if it's a huge issue, but this is my next YouTube video. So watch for that. If I already have Schedule K and did not add my home office, is there a way to add it on the personal? So if you have a home office and you didn't get reimbursed for it from your partnership, this is for partnerships or S corps. I think she's asking, or I think he's asking, can I take that as an unreimbursed business expense on my K1? If that is the business policy, then I think you can. I'll do one more. Hey, Carmen, when you're self-employed and don't owe any tax, are we supposed to send a paper form instead of e-filing? Yeah, I have run into that. If you don't show, if it's all zeros on the 1040, I get an error from my software that says, this can't be e-filed because there's no income showing. So what I'll do as a workaround in that case is I'll put a 1 as income. Luckily, that 1 won't generate any tax. It's just not 100% accurate. But otherwise, yeah, so either do that workaround and put $1 or paper file. So what if an LLC that has one employee and an owner? Oh, I think I did this one. What if an LLC with one employee, do they file a tax return as a sole proprietor? As no, you file as, if you're an LLC, you file as an LLC. But single member LLCs file the same way as sole proprietors. You would just put your business name as the LLC name. Anyway, anybody who just joined, this will be available on YouTube. I feel like it disappeared on Instagram. I don't know where it went. But today's stream is on my channel. Yesterday's stream is on my channel. We covered a ton of questions. Feel free to join my Accounting for Online Sellers Facebook group. If you have additional questions, you can ask them there. We have a lot of good engagement and a lot of knowledgeable people in that group. Oh, this is a good question. That could be right. I don't know for sure. I would have to double check, because with COVID and stuff back in 2019, the IRS extended the deadline for everybody to July. Was that? Yeah. So if that was the case, the question is, do we still have until July to claim any 2019 refunds? Possibly. All right. Thanks, everybody. Hope this is helpful. Check out Reseller Tax Academy, and see you next time.